Our fellow traders, well, another weird day in the market, but we made it through. And hopefully this market will get itself back in gear. And we're still reeling from the hits it took last week and Monday. I think things are trying to sort itself out. So we should be back on track. There's just a lot of uncertainty and people being a little bit more cautious about what they do. So it affects day traders more than anything else. A lot of the stocks that we trade, we may not get to follow through. We may see some erratic movement, but it's just par for the course right now. And I made some mistakes today, just mistakes that I shouldn't have made, but just caught up in overthinking and overanalyzing. So what's prompted me to share this message with you, stop overthinking and stop overanalyzing. Just execute according to your strategy, your plan. You know what the good setup looks like, and you need to wait for that good setup. And me thinking and trying to put stuff in the market that's not there causes me some frustration and causes me to go backwards and dig a hole in the morning that I have to come in the afternoon and dig myself out of. And it's not a fun thing because a lot of times you really can't get anywhere doing that. So we have to stop overthinking and stop overanalyzing. The thinking and the analyzing is done prior to taking the trade. So once we take the trade, it should be automatic. Execute. Our execution should be perfect. We should nail our entries. We should nail our exits because nothing else should be affecting that. But we also have to execute our trade plan and not amend it in the middle of it and not wait for the setup to actually happen. So we've got to stop overthinking it. We know what the setup is. We know our strategy. We know what we're looking for. We got to stop overanalyzing what we see. We should be able to quickly analyze what's going on in the market or with that stock and execute. And as we said before, execution is worship. It doesn't matter how much knowledge you have. It doesn't matter whether you have the elusive goose that laid the golden egg strategy. None of that matters. If you can't execute that strategy in your trade plans in the market, then you won't make a dime. That's what it's all about. So stop thinking and overanalyzing, and let's just execute our trades. All right, so we are starting trader rehab. There's a lot of traders who need this. They need to go into rehab. They're having trouble with their consistency. They're doing just what I was talking about. They're overthinking things, overanalyzing things. They're lacking confidence, or they have fear of missing out and they jump in trades when they shouldn't. And if you don't really have experience, it's hard for you to overcome that. So, and this is just a small amount of problems, and there are other problems that this trader rehab will take care of. So it is starting. Like I said, all you members, everything I do is free. So even though it's a new class, it's just gonna start. You don't have to pay a dime. So everything I do is free. So be prepared. I will be announcing it tomorrow and kind of going over it in more detail in chat. But thanks to one of our members that gave me this idea, I think this is going to add another element to that roadmap to success that a lot of you guys started on. And I'm really excited about this one too. So stay tuned. I'm going to drop more information on it tomorrow. All right, so let's take a look at what we did today on IFF. This is a mistake that I made this morning. And I knew, because of the way the morning was going, I knew that I shouldn't have assumed or just felt that the market was going to be really good. I knew that there was some uncertainty still and that I should not have gone on the 3-minute chart. I should have stayed to the 5-minute. And had I stayed to the 5-minute, this is the first 5-minute candle. Now, when I got in this on the 3-minute candle, this was solid red, obviously. And we sold down and then quickly got bought back up. Now, so on the 3-minute, it looked really, really good. Had I waited for this 5-minute candle to print, I would not have touched this trade. I would have walked away, because as I've told you guys, when you see a candle like this is big indecision. When you see indecision, you don't trade the opening range, because it's probably not going to follow through, and you may end up stopping out and losing your money, just like I did. But not only did I make the mistake applying the strategy, I didn't execute this well, because I knew the market was telling me what I needed to do, and I didn't do it. I also messed the stop up. I got in with too many shares, and I messed the stop up. So I ended up taking about a $300 hit right off the bat. And I don't want to lose that much. Starting over at the beginning of the month, I'm not up to $7,000-$8,000. So I'm not going to risk $300. I'm only going to risk $150 to $200. And with the wrong share size, I ended up, stopping out for a $300 loss, or maybe a little bit over. I tried to just calculate it in my head, but started the day out with that. And you can see, here's the 3-minute chart right here. So this being I get all these marks on my chart. This drives me crazy. So the 3-minute chart is you can see right here, that was the entry. I got in and solid red, and then all of a sudden, wham. Kind of looks like grub, but this was on a 3-minute chart. So that was that. So I waited the rest of the day, and you can see this thing did come down, and it did make the move that I was looking for. Here's a 52-week low right here. I was looking for this to come down and test the 52-week low, potentially bounce, and then come back and break through it. But we ended up doing it over here, which is, fine. But I waited and waited and waited, and I saw this later in the day. There was really nothing moving. Everything was just trading sideways. And so I was just kind of watching this and see if we were going to reject this 52-week low, because if we did, I would have expected it to sell. And we rejected it here, but then it bounced. It rejected it again. So I waited until we got under the moving averages. We established under the moving averages. I felt pretty good that this wasn't a bear trap, because a lot of times they like to do this, trap some shorts, and then throw this thing back long. So I waited until I felt confident that that wasn't going to happen, and got in. Did get a little pullback here to the moving average, but that's fine. That we can deal with. And then just started hitting targets. So kind of turned this around. Still ended up red on the name, but turn this around. The afternoon was just a lot better and a lot cleaner trades. Making sure I waited for the setup. So that was IFF. The next one was SQ. Here's one where I did not wait for the setup to complete. I was waiting for the bounce on this. This is not a bounce. One green candle is not a bounce. It's not, especially when it's a reversal candle or reversal hammer, whatever you want to call it. So this was just a big mistake. The entry should not have been until we got below the low of this candle. We never did get that. There was no entry here. So this was an execution error. So I'd say this morning, I had an F in execution. And when you have an F in execution, you're going to have a red account. And that's pretty much where I ended up this morning. But this is where I made the mistake. It ended up getting stopped out. Now I could have stayed engaged and got in right here under this candle. That would have been the entry, but a more sensible entry. But I just completely messed up this one. This was just bad execution. And I don't know if I was just off today or I let the market get into my head and cause me to make some dumb trades this morning. But whatever the case is, I went through my exorcism and got all the demons out, and so we were able to close the day strong. Roku was a pretty good trade early. This was actually the second trade I took. I took this actually before SQ. Got in it on this break, and it bounced. I didn't see the 50 here. This is the daily 50. I didn't have it marked, so I didn't even see it. Had I had it marked, I probably wouldn't have taken this trade until under here. But I got in it, a little bounce here, and we sold straight off. This was a chase. Okay, this was another. I wouldn't give myself an A for the strategy, but A for execution because I executed it properly. But I really should have waited until we had another bounce or a retest or something. But I chased this down because I was frustrated for missing it. And ended up getting in here. Did get to the 200, which was my first target. But then we tried to sell through and then a bounce. And we rejected the 50 here. So as we came back through, I waited until I got another candle. And we got below the low of this candle. That triggered my entry. This is making me feel better about this not being a bear trap. So I got in, just started nailing targets. This was my final target down here. It didn't quite get there on the bounce. Now, I took this off because I thought we had claimed the 9, but I was looking at a 3-minute chart. When I looked at the DOS chart and I looked at the Thinkorswim chart, they didn't look the same. I couldn't figure out what it was. It was that I had this on the 3-minute chart because I was talking about the first trade I took in the 3-minute fiasco. So this caused me to take this trade off when normally I would have just left it on to test the 9 and potentially could have added on this candle and continued this trade. So execution on this wasn't perfect because I was looking at the wrong chart, but I did nail the entry. I nailed the profit targets. And based on the chart I was looking at, I made the right decision. So I felt pretty good about that. And then I had to wait. I wasn't going to jump in here. I was going to wait until we broke the low. I got in, and sure enough, it started to bounce. But I'm using the 9 as my guide here because we're trending down. In these trend continuation trades, I use the 9 as my guide. So if we ever lose the 9, I'm taking it off. Unless you've got the 20 this close to the 9, then I'll defer to the 20. But if it's this far apart, the 9 is it. So it didn't close above the 9 and claim it. We rejected, had another little attempted bump here, and finally hit my target. And then we bounced and stopped me out on the bounce. But net, locked in some really good profit on this. 576, the only name that we were green on today. $576 on Roku. I know it's a hard trader sometimes, but if you catch it trending, it's one of the easiest trades you're gonna make. And I did catch it trending the first time. This time, the second trade, and this trade was okay. It just had a little bounces in it. But ended the day up just over $200. Really happy with that. I'm not gonna cry, bitch, moan, and complain. But for the day that I had, for the morning that I had, being able to leave the day green was a big plus. Now, I'm not trading earnings again. The market is just too messed up right now. I don't have an edge. If I don't have an edge trading earnings, I'm not going to do it. But I do have something to share with you guys. I need to get your feedback on here in a minute. But let's cover DIS real quick. This was the DIS swing, started back in May, the beginning of May. So 3 months we had this. I took profit, added back, took profit, and with the washout yesterday in the market, it took me out. And so not bad, almost $4,300. I was really looking for twice that. I thought I would get about $8,000 out of this trade, but it just didn't happen. I can't blame it on one person or one thing. There's a lot of things together that hurt the market last week. So we're just having to deal with the effects of that. So had to take it off, but really nice profit on this. And today I am gonna keep working this. We did get a sell-off on earnings today, but I think we're gonna recover and start making the move up. It was some pretty bad news that Disney put out about money they lost with this round of movies. I think they just overextended themselves throwing out movies. But I think when people realize that this was just a one-time thing and they're going forward, the guidance is going to be good, this is going to come back. At least that's my humble opinion on it. That's what I'm looking for. So here's what I need from you guys, all the members. I am looking at emailing out something like this for all of the earnings stocks that I'm looking at. And it's only 2, no more than 3 earnings stocks that I'm looking at to trade. So I'm not going to do all of them, just the ones that I'm looking at. And just kind of tell you what I'm looking to see. So you'll get, and this information comes directly from Earnings Whispers. That website has a wealth of information, and everything I get from them is practically spot on. Even the fact that they predicted Disney to be a short. Even though that they predicted the earnings per share was going to be greater than what the consensus was, they still felt that in the short term things were going to not look good. But me and my infinite wisdom, with the market tanking and selling off like this, I'm expecting it to bounce. I'm thinking these guys sold it off, but this candle here, this gap down, kind of threw a wrench in it yesterday. But I was thinking that they were selling this off so that they can buy it up at a lower price and sell through an earnings gap. That was my theory. But again, this market is a little crazy. It's kind of hard to put your finger on what's going on. So that's why I stayed out of it. And I told you, just what I was seeing. From what I was seeing, I believe that the big players sold DS off into earnings to get a better price to buy into the earnings announcement. And I expected a gap up. However, prior to the market taking a hit, the consensus was a gap down on earnings. And I have no edge on this, so no trade for me. The market doing what it did took my edge away. I had no idea what was going on. I had my thesis, but that was based on what's happened over the last couple of days. And so if you look at Disney, you can see it tried to push up a little bit, then it sold back off, and it has since bounced. It was trading around 139, almost back to 140 on the bounce. I don't know if it's come back down or whatever. But like I said, I don't think the numbers are that bad. I think they put out some bad news. I think this is going to recover. So that's why I'm staying bullish on this. But I just want to get you guys feedback, you members. Do you want to get this, prior to earnings? I don't. The timetable now would be, sometime after between 3 and 3:30. When school starts back, it might have to be bumped up a little bit earlier than that. So we'll see how that works. But I'll talk about it again tomorrow in chat and kind of explain what some of these things are so you'll be able to read it. So guys, let me know. That's going to do it for me today. You guys have a great night, a great evening, and I will catch you tomorrow.